Well, maybe we'll get going. You got your deck here, and thanks, Ali, for
pleasure.
We thought it might be tough to do something at the end of spring break or March break here, but we didn't even know about this stuff coming up. Yeah. But this is great. I think we'll be doing a lot more of these webinars, and I think people really have get a good insight into what you guys are doing there, because I'll hold it. Ray put us on hold, so I'll get a hold of Ray. So you can start up though.
Okay. Thanks very much, James, and thanks very much for facilitating this event. And we did realise it was spring break, and also now we obviously have the virus circumstances. And first and foremost, I wish you and your family safety and wellness through this period, and I'm sure we will all come out of it successfully. So yeah, I guess on the positive side, it gives us an opportunity to become and embrace digital engagement. So this is very much part of that. And of course, as soon as we can, we'd be delighted to travel to Toronto and meet people in person. I've known James now for several years, and we are keen to engage Canadian asset managers. I think James has in the past organised a roadshow out to Dubai and the Middle East, and we'd be very happy to support such initiatives going forward. I'm going to share with you some macro economic and market trends. Obviously, at the moment, some of those are undergoing some disruption, but I think that it's reasonable to suggest that once we get through this, we will have we will revert back to the long-term trends, and they remain valid. And if you have any questions, let's try. I know we're digital. Let's try to keep this interactive. So I think you're all familiar with your mute buttons, and you can ask questions as we go along. We also have a chat function in the top right, that you can just pose any questions that come up. Okay, so yeah, we've got people coming in now, James.
I just sent out a huge email to everyone with the calling details.
Yeah, there they come. So I'll just pause for.
Yeah. And we just remind people to mute. I think I muted somebody who came on with some background noise, so we can so we can just hear one at a time.
Yeah, that's great. So as I was just suggesting, if you have any questions, then obviously there's the chat function in the top right, or you can unmute and just pose your views. So here we go. Here comes everyone. Okay, so this talk is really around looking at why CAASA, which is Middle East, Central, South Asia, and Africa, could be a great opportunity for Canadian alternative asset managers and associated companies and firms. And this is really about what we're trying to do and why we engage CAASA and Toronto Finance International and various other trade bodies around the world and trade associations, is that we generally see that there's a great demand for expertise in the Middle East for some of the reasons that I'll cover today, but there doesn't necessarily happen to be the local capability to address that demand. So this is a win-win proposition where Canadian expertise can be leveraged in order to provide the products and services that that the region needs in relation to financial services. And then generally, in terms of MIASA, you've got some sort of headline characteristics that are supportive to asset and wealth management. You have continuing, of course, diversifying economies. That's going to continue, no doubt about it. And that diversification is driving the economies of the region into different segments. I mean, Dubai has been diversifying for several years, but obviously recently we've seen other economies in the region adopt the same approach. These are growth economies as well. So, economic growth, diversification. You've got a very supportive demographic in terms of the age of the population and their adoption of technology, which actually lends itself to some of the new ways of providing asset and wealth management services, robo advisory, or lower cost entry, or indeed providing some innovation in terms of products such as retail investment into private equity, and alongside that is the trends that we see in how wealth is being held in the region, and we'll touch upon some of the detail in a moment. And then overall, Dubai and the region has really worked hard in terms of upgrading, enhancing its infrastructure. And so, if you go out there and, if you look at, if you're in the DIFC, you'll see that actually it's, in many ways, a familiar environment in terms of, it looks and feels as if you're in, Canary Wharf in London, or, downtown Toronto, or Manhattan. So that's the overall drivers, and then let's just look at some of that in a little bit more detail. So the proposition around growth economies, I mean, certainly the longer term trend there is positive, above average economic growth in the MIASA region, and that's over 2 decades. So it is a long-term growth trend that we see. And then hand in hand, with that economic growth, we're seeing significant growth in financial services. You have a demand in terms of financing that economic growth, but you also have wealth being generated out of that economic growth that needs to be managed and transacted. And so, you're seeing a corresponding increase, 7% annual growth in financial services since 2000. Now, just looking at those, the wealth pools in particular, obviously the headline and what most people are familiar with are the sovereign wealth funds. And in the GCC, you have funds that are equivalent to around $3 trillion. If you widen that into Central Asia, then obviously that number goes further up. And obviously that has up until now been generated by oil revenues, and those economies are also diversifying, as I mentioned. Now these funds is interesting. I mean, for a smaller asset manager, they may not be that accessible because of minimum ticket size and all the rest of it. But these funds are changing in their nature. So ADIA, for example, in Abu Dhabi, has taken more in-house capability. So 40, over 40% of their assets under management are now managed in-house, but they still look outside for expertise, particularly it's a combination of passive, but then also the more esoteric niche strategies, or where there's some uncorrelated or potential for uncorrelated returns. So that they do look at alternative managers in that way. But less recognized, I guess, is actually the quantum of private wealth that's been that's developed in the region is actually comparable to the sovereign wealth money. So there you've got a very concentrated, clustered, sizable amount of wealth that's that's been generated in the region through a number of industries now, right? So yeah, oil was there at the start, but commerce in various aspects has also driven wealth. And now the interesting thing is that this private wealth is in a state of flux and transformation, because generation one, which was the wealth creator, if you like, through a broad spectrum of business interests, handing over the reins to generations 2 and 3, who are less interested in running physical businesses, who have more of an appetite for more sophisticated investment, and look beyond physical businesses, real estate, and cash. So that transformation is really underpinning increased demand for financial services, and in particular asset management. And that wealth continues to grow. So the UAE has a healthy forecast for growth in ultra high net worth individuals, 15% by 2023, and it is one of the CAASA region is one of the top 3 global regions for private wealth growth going forward. So the wealth is there, and it's growing. And actually, it's also drawing in, for various reasons, and we'll touch upon those drivers shortly. But it's drawing in ultra high net worth individuals and high net worth individuals from a number of countries. So not just the immediate GCC, but much wider than that. And you can see some of the the numbers there in terms of just the UAE, right? So you've got 3,000 individuals with $30 million in assets, and so that's an interesting indicator. Yeah, and then this kind of just supports that it's actually Dubai itself. You've got average wealth per capita significantly higher than the global average, and also it is attracting high net worth individuals from a range of jurisdictions, and growing faster than some of the major cities around the world. But wealth management is underpenetrated in MENA and the GCC. So if you look at the percentage of wealth management assets as a percentage of banking revenue, it's tiny in MENA compared to the global average. And you can see that actually, where is that wealth being held in the GCC? Well, bank deposits. constitute a significant percentage of where that wealth is being held, and that in of itself gives an indication as to the opportunity. Yeah, and there a little bit more detail on those bank deposits. Just looking at UAE, so that's the dirhams, and Saudi, you've actually got over $700 billion of private wealth sitting in bank deposits. So it's underpenetrated, but actually the business of wealth and asset management in the region is profitable. So whilst we're seeing some moderation globally in terms of wealth management revenues, in MENA we've got healthy growth and almost doubling in terms of the projections for the UAE. So underpenetration combined with a profitable business, for those that gain the access. Are there any questions so far? Okay, I will move on. So in terms of Dubai, so if you think that the proposition of CAASA is an interesting one, then the question arises as to, okay, where is the ideal nexus for our engagement? Well, of all the cities in CAASA, Dubai is the really only truly global city that's really built on its heritage as a commercial trading hub, and leveraged its geographical position. And Dubai gives you, it gives you that trade, it gives you that market access. It's really worked hard to put the infrastructure in place to support businesses, lifestyles, and people looking to do business from Dubai as an international hub throughout the region. Yeah, and just underlining its position as a strategic location for trade, significant trading done with the United States, with India, with China, pivotal locations, strategic location linking Asia with the Middle East, Africa, Europe, and through that North America. And I think trade brings together talent and capital, and indeed the dynamics that we've seen play out in Dubai as it's developed over the last 3 or 4 decades. And in terms of the quantum of the trade, you can actually see that the global trade flowing through Dubai has tripled over the last 10 years or so, supported by the investment in infrastructure in terms of Jebel Ali ports and the aviation industry. And the market access, from Dubai, you do have a population size of 2.2 billion within a 5-hour flight, which I think is pretty unique. If you tried to do that anywhere else in the world, I'm not sure, in terms of an international, rather than just hitting one particular country. But it's a very very good access, and the population is a mix of different types at different levels of development, but we can see uniformly these economies and these geographies, some are more accessible than others right now, admittedly, but the middle class is growing, sophistication is growing, demand for financial services is also growing. And then just sort of underlining that connectivity from Dubai, you've got fantastic links through to the various geographies around the world. And in terms of the the business infrastructure that Dubai's put in place, you can see that in some of the rankings the city has achieved. So one that's really powerful for me is that over 70% of Fortune 500 companies that are active and present in the region have hubbed their headquarters in Dubai. Dubai's competitiveness is ranked 1 in MENA, and this is all reflective of the efforts that have been put in place in terms of the infrastructure, transport, etc., that supports businesses doing well and being active throughout the region. And from a livability point of view, the medical facilities are there, the education establishments are there, the leisure opportunities are there, and you have Dubai ranked 1 in MENA for livability by the EIU, 4th globally by MasterCard. So certainly those rankings reflect the hard work that's been put in place and what Dubai has achieved. And then what about the DIFC? So I represent the DIFC, which is Dubai International Financial Center, which was created in 2004 to complement the commercial trading status of Dubai at the time, and from very well a zero start in 2004, Dubai is ranked 8th globally as a financial center by the ZEN research consultancy based in London. And the aim has been from day one to provide an ecosystem in line with international standards of law and regulation. So it's a common law environment that you have in the DIFC, and combine that with business-friendly attributes that we'll touch upon. And now all the growth that the center has seen has been organic and authentic. There hasn't been any inducements or you come here and we'll give you a mandate. It's been people setting up business and doing well from making that decision.
Hey Ali, the story I heard, I don't know if you can confirm this, but from official capacity, but they were talking to the Sheikh when he was setting it up back in 2004, because we were there in 2014 and they were celebrating 10 years, and he said, okay, I want to have this area here where all the global people can come together and we'll have business, because it's the economics of Dubai are different from Abu Dhabi and other areas of the Middle East, and they said, well, sir, that's great, but Your Excellency, there's people really maybe Sharia law is really not embraced everywhere in the world. He says, well, what do we need to do? Well, perhaps common law. Okay, we'll make this area as common law and USD, done. And one of the benefits of having central land management, but
yeah, absolutely. No,
kind of a cool setup.
No, you're absolutely right. And the common law environment is very important. I mean, interestingly, on that, we do have our own set of laws, the IFC law, but they are very closely aligned to those of England and Wales, and but it does, it's important because that does allow us to legislate, so we can adapt to the local context and also adapt to changing circumstances, right? There are other centers in the region that say, yeah, we have common law and we follow England and Wales, but they don't actually create any legislation themselves. So at some point there may be a disconnect between what is happening in their local context and what some other jurisdiction is legislating for that may not apply to where they are. So it's you can have an aspiration for common law, but you actually have to do the hard lifting, the heavy lifting to make it work. But we believe over the 15 years that it's been working well. And yeah, so it is ranked 8th in the world. It's actually now the largest cluster, and it's a full service financial center. All the segments are there, but you have 25,000 people, over 600 regulated entities. And the thing is, it's a center of substance, and these guys are not running charities, right? So it must have business rationale. It must, be beneficial from a business perspective to have that engagement. And yeah, these are some of the some of the institutions that have hubbed in the DIFC. They may have other offices in the region, but they utilize the DIFC as their headquarters, as their hub in the region. And I would say also that if you're looking at Dubai and Dubai International Financial Center is the international center, right? So as I said, there are others, but they tend to be just domestic plays. So if you're interested in Saudi, maybe it's just Riyadh. If you're interested in the sovereign wealth funds of Abu Dhabi, maybe you set up in Abu Dhabi. If you're interested in Qatari money, maybe you set up in Doha. But Dubai actually acts as a hub for that wider region. So if you're thinking, actually, I'd like to engage with as many investors as possible, then again, Dubai would seem to be the choice to make. Yeah, so some of the business friendly aspects of the center. It's 0% corporate tax, 0% income tax. It's 100% foreign ownership. You can employ who you like, and it's free flow of capital. And just on the corporate governance, it's very, very strong. It's very important for business to feel certain about how things are working. So we do have the 3 separate bodies. The Dubai International Financial Center Authority, who I work for now, is the body responsible for administering the center, nurturing its growth, raising awareness with the international community as to what the DIFC is doing. Then we have the regulator, the DFSA, who I actually used to work for. So I was a financial regulator for my sins previously. But that is independent, and so are the courts. And each of those bodies has their own board of directors. So yes, of course, there's an overarching strategic commonality in terms of the success of the center, but each has its own responsibilities for executing its obligations under its remit.
Elliot, I got 2 questions. On the previous slide,
Yeah,
you're not paying tax and duty, and I guess foreign. You have all your ownership and everything, and I imagine there'll be some transfer pricing questions when people start to move stuff offshore to do DIFC and that. But other jurisdictions like Cayman they tax the crap out of everything coming onto the island, and they have licensing fees and everything. So what does Dubai get from this? What do they? What's the modus operandi? Is just bring people together, or how do they make money off this?
Yeah, so I think the business rationale as far as Dubai is concerned is an economic multiplier effect. So the DIFC, if for every dollar spent in the DIFC, there are $17 for the Dubai and UAE economy, because if Goldman Sachs or whoever it is bring 20 people, then they will bring their families, and they'll be utilizing the services and restaurants and schools of Dubai, and people will come and see them, visit them, stay in the hotels, that type of thing. I think it's also fair to say that from a taxation point of view, there are I suppose their revenue is raised from some certain taxes on consumption, right? So it's a different model, not necessarily a tax on income, but there is but it depends what you're spending your money on, right? So for example, there's a 30% tax on alcohol, so you can
Oh yeah,
yeah,
that's a big earner.
so you've got, but it's available, right? So whatever your
at the hotels and airports, of course, only. Yeah. Everywhere else, it's smoothie bars.
Yeah, that's right. But I mean, there are plenty of hotels, and within those hotels, you have various bars, and there are Irish pubs and English. There's a place in Jumeirah Beach Hotel called the Down Anchor, and it is literally like walking into a pub in England. It's incredible. So there is that sort of tax on consumption, but nevertheless, and having lived out there for 8 years, I can say that net it is you do feel the benefits of the model.
And then on this slide, or the other one, yeah. So I guess the oversight is from the government, and like how much have they done within the or I guess how much control do they have of it, and have there been any sort of like weird things that have happened where people have been like, hold it now, that's not really industry practice. Like we have regulators here obviously too, and they come from our government.
Yeah, so I mean, as I said, I was with the regulator, for the 8 years that I was in Dubai, and my team was responsible for authorization of people coming in, and at no point did I have any hint of interference in my independent ability to make a decision or the operation of the team. And I think that was throughout the DFSA. So the role of the DFSA is enshrined in law, just like you find with any other regulator in Canada or the UK. But just like Canada and the UK, you do have a nexus with with government, right? So in the UK, the head of the FCA and PRA report into the Chancellor of the Exchequer, as head of Treasury, and there is there is some exchange of communication around strategic objectives as well. But there isn't, I can say that it's 15 years of operation. Certainly, when I was there, the regulator operated independently, and similarly, with the courts. So so far so good, and I see nothing that would be changing that. I mean, I think that the parallel for people, in my mind, the reasonable parallel would be Singapore, because in some ways the form of government in Singapore is similar to what you see in somewhere like Dubai, but I think Singapore is, the perception is it's well run, it's safe and certain, it's pro business, it's a common law environment. And I think that Dubai, which has been around actually at the same sort of time as Singapore, and the DIFC should be viewed in the same way. So yeah, does that answer your question? Is that right?
Yeah, thanks. Yeah, that's it. Yeah, I get those questions sometimes.
Okay. So just coming on to the asset raising more specifically. So we conducted a survey in 2018 of the participants in the centre, and these are some of the insightful data points. So close to 500 billion in assets have been raised through the DIFC from investors, throughout the region, both institutional and private. And 75% of that money flows to managers that are present in other jurisdictions. Okay, so they have a relationship management nexus, or they have an asset raising nexus in the region. They raise the assets and they manage it in other jurisdictions, and maybe invest them in other jurisdictions as well, right?
Which jurisdictions are they usually in? Is it like nearer to there, or US?
Yeah. The US guys, the US is a primary destination for assets that are raised, and also it is a primary origination of the managers that those assets are being given to. So actually, US managers have been very, very successful. Canadian managers should equally be successful. So
how do they view Canadian managers there? Is it on par with the US, or what's their kind of view? Like, I know most people want to move to Canada and Dubai, but
yeah. I mean, it's I think it's very positive. Actually, when I was my last bit of travel before all of this other stuff happened was to Dubai, and I met members of the Canadian consulate in Dubai, and obviously Canada as a government is very keen to look at new opportunities for exporting expertise. And it's a given, right, that you guys sit right next to a multi-trillion-dollar economy. But I think that if there is an opportunity to diversify and look at new markets, then I think you'd be well served to take a look. And so actually, on the right-hand side, 90% of that money is deployed in global markets. So, and in many ways that makes sense. You've got regional investors looking to diversify. They're looking at other markets. US is a big pool, but there is, for example, with Brexit in the UK, I've seen certain flows. The UK still significant flows, but continental Europe had an uptick over the last 2 or 3 years in terms of asset flows. Germany, France. So there is potential.
Yeah, I've noticed the consulates there is great too, because they actually kind of know financial services, which is nice, and they've been great to work with. And they're right in the Jumeirah Towers there, right across from DIFC. So
that's
right there. You can stay in the hotel right next to it. It's fantastic.
Yeah, absolutely. I think I met a lady called, I think, is it Akiko?
I'm sure that's who I met. I'll have to go through, but yeah, there's.
But they're very active.
They have a good team there. Yeah.
Yeah, very active, very supportive. We let them know that we were doing this with you guys as well, and they're very pleased about that. So yeah, we have that engagement. You may also, James, just while it's on at the top of my head, Toronto Finance International are looking at arranging a fintech delegation to Dubai with the Canadian consulate in Dubai. So there may be something for CAASA to do, maybe alongside that.
Oh, great!
In addition to that, so just looking at the money, so around 100 billion is actually managed in the DIFC. 25% of that is family proprietary money. So that's the other, trend and development we've seen. That not only do you have the private banks sitting in the DIFC, which could be a source of, business relationships, but you've actually had families from the region formalize their structures and set up entities in the center. So that cluster is very much there, and they're managing around 25 billion from the centre. We've also seen DIFC domicile funds increase substantially, so there are now 100 plus funds that have been set up in the centre using our structures again, which are common, structures similar to Jersey or or UCITS or Cayman funds, depending on which client segment is being targeted. But that's also an area of possibility for Canadian asset managers, particularly given actually some of the other stuff that's gone on with some of the traditional offshore domiciles. So Mauritius has had a bit of a tricky time in terms of its reputation, and also one or two things going wrong in Cayman, and in fact the EU has put Cayman on the blacklist in terms of money laundering risk. So it's just that we're just putting another alternative on the table.
Does their entry into the EU passport, something like that? I think the last time I was there, they were talking about that. I'm not sure if that came to fruition.
Yeah, so that good point, James. So we do have, so the regulator there, the DFSA, has signed an MOU with ESMA, which essentially allows placement through the exemption. So it's a third-party exemption that's available where you're targeting particular types of investors. So I think 26 of the EU states are accessible through that route from the DIFC, and I can share further information on that if that's of interest to anyone.
Yeah, sounds like a good call.
Yeah, and then just in terms of distribution, I think there are over 5,000 funds that are distributed from the centre, and the cluster is just very supportive. You've got international private banking platforms based in the centre. You've got the regional banks who are looking at product, who are looking at actually providing more in asset management. And one of the avenues to explore for niche managers is okay. There are platforms in the centre, affiliated fund managers, principal global investors, but there are also smaller platforms that provide a very cost-effective way for smaller managers to access. You've also got the capability of striking up relationships with regional banks around white labeling or distribution of products in that way. And I do know of some asset managers that have struck up such relationships with regional entities. And then you have the full range of advisory intermediaries in the centre, be it placement agents or other types of intermediaries that you could engage with in terms of distributing your product. And then just to give you sort of a flavour, some of the alternative managers that are in the DIFC, some of those are on platforms, right? So that they're not there physically, but they provide their product on platforms that are in the DIFC. So I think that's to sum up, I think the market opportunity is there. I think the routes to market are varied and have proven successful for others. And I really encourage you guys to take a look. And I'm here to support you in your investigation. And if you want to post the virus world, we'd love to host you guys in Dubai and see for yourself actually as to what is going on. Maybe that's something that James can look at. But and that's
I would love it. We actually, when we did the last one, we had funding from the government to get half of our members' costs for the trip done. And we did London, Dubai, Geneva. It was great. So what? I got another question.
Yeah.
So if you guys, it's like 13-hour flight and so realistically, people aren't going to go, every week to Dubai. But so what do folks that are further away do? They do platforms, or how do you get on these other kind of regional platforms, like maybe at Emirates Bank and such, or how? And do you need a so-called like local presence that will, like they do in say Switzerland? They have a directive there. Is there, or can you just come in and just kind of cowboy it, and maybe you get some trades, or what's the path that people usually take if they're halfway around the world?
Yeah, so I think I just had a question in from Ray.
Yeah, we had another one too. Yeah,
I'll answer that as well. So I think that I mean all those routes are possible, James. There's no obligation. So, for example, if you were going to strike up a relationship with a with a local bank as a manager, there's no obligation to say you need to have a presence in Dubai or UAE in order to facilitate or enable that particular relationship. But the reality is, in terms of you increase your probability and chances of landing such a relationship if you're there often, if you're there to engage, etc. But in terms of there's no obligation, but I think the business imperative is listen, the more you commit to it, actually the more you'll probably get out of it. From my perspective. Emerging managers, Ray, yeah, for sure. There are certain platforms in the DIFC where you can actually leverage off the license that that platform has with the DFSA to be based on that. If you wanted to do something locally, but also externally to that, in terms of product for emerging managers, people like to see a track record, and as I said, if you go up the sort of institutional scale, then there's minimum ticket sizes required. But I think the sweet spot is probably going to be that private wealth segment, and then that's really about developing those relationships. So how do we do that with you guys sitting in Toronto? I think, as I said, a delegation visit out there for us also to see if we can enhance your engagement. So we're probably going to be, all things being equal, we're probably going to be in North America in October, and we'll look at coming to Toronto in person. The other recommendation I would have is you've got various asset management events that occur in Dubai. It's a real hub for conferences, given the wealth pools that are in the region. So if you want to escape certain elements of the Canadian winter, attending a conference in Dubai when virus issues are out of the way, maybe quite a good way of exploring some of the potential relationships you could strike up. I'm also sorry, James. Yeah, go ahead.
No, I was saying, like, the one I go to is the Middle East Investment Summit. That's like 650 people in April. I was booked to go to. Yeah. And that they had like matchmaking. You could do tete-a-tetes. You can just meet people. They had tons of panels going on.
Yeah.
And it was like multi-format. And then the other one was the AIM Summit that Raha puts on. That was pretty decent at the Waldorf. And they're a few hundred people. So it's not like a smaller, like we do our events like at 200 people. It gets to be a bit more transactional just because there's so many people, but you get tons of contacts and cards, and then you can be there for a week and just follow up with people for forever. So
yeah, exactly, James. And I mean, and that's in terms of doing business, if you go to Dubai, you will find that people are really quite open to introducing you to somebody, or referring you on to somebody, and that networking effect is very powerful there.
Yeah. I literally had one of the royal houses was, oh, say, you want to come to Dubai? You want to set up something here? I'm like, no. And they're like, oh, okay. Well, what are we going to do? But if you wanted to go there, they were like, yeah, we got the contacts. We got everything here. And away they go. So it was kind of interesting. You don't see that elsewhere.
Exactly. Any other questions? All right.
Okay. Well, I guess we're at time too. Look at that. Thanks everybody. For those that came on a bit late, we're recording this, right, Ali? So we can have it available for later viewing, listening.
Absolutely, recording, and I'll also distribute the slides as well. I'll send them through to Paul, and then you guys can onward distribute.
Great. And most of you probably got the email. We're doing a bit of a pivot into digital, and so we're doing quite a few webinars. We have a couple of things set up even for next week, and podcasts. So those will be coming out over the next short while as well. So we're gonna get the messages out to everybody. So we'll, as everyone's leaving, we'll thank you very much, Ali, and we'll see you again soon.
Yeah, absolutely. Thanks very much, James, and everyone for attending.